According to real estate analytics firm Black Knight, the refi boom is providing stimulus to the economy as more than 14 million homeowners refinanced during the pandemic, with 2020 and 2021 being the biggest years on record. Low rates saved borrowers $14 billion over the last year and a half, and Black Knight now projects a savings of $35 billion by the end of 2022. But with rates on the rise, is the boom about to go bust? Joining me now is Andy Walden, Director of Market Research at Black Knight. Andy, welcome. This is an interesting coda on the fact we've spoken with Loan Depot and other mortgage originators whose shares have struggled this year because the refi boom is trickling to an end. It has been a massive stimulus for people, hasn't it?
It absolutely has. And you just mentioned some of the numbers, $35 billion in potential aggregate savings realized by the end of next year. And that's on top of the $320 billion that folks have cashed out from equity over the last year as well.
Wow. OK, so where do you think all that money is going? Can you guys tell?
Yeah, and I mean, I think a lot of it's being reinjected into the market in terms of other goods and services. When you look at those cash out funds specifically, it tends to go more towards debt consolidation and renovation type activities.
All right. And clearly we've seen a boom there in related stocks, Home Depot, Lowe's, and all the rest of it. But it's trickling off, isn't it? So how much do you expect going forward? Maybe higher rates will be a catalyst for kind of a few people out there who think, geez, I better do it now. But pretty much it's done, right? I guess that's my point about the shares of things like Loan Depot. If they thought a lot more was coming, they wouldn't be down double digits this year.
And if you look at it, I guess it depends on where you look, right? If you look compared to where we've been over the last few months, refinance incentive is certainly down almost 50% from where we were in December last year. If you look prior to 2020, though, we still have 10 million refinance candidates out there, folks that could save 0.75% through the refinance of their mortgage. That would be at an all-time high in any year not named 2020 or 2021. So
wow.
Historically speaking, still a lot of incentive out there, but nowhere near where we had been over the last few months.
So basically 14 million refis during the pandemic, nearly 9 million this year, and you think we still have 10 million out there?
There's the potential for 10 million more. Now, not all of those borrowers will act on that incentive, but historically speaking, incentive is still relatively strong.
So if they do that, we're talking about another kind of stimulus that's waiting in the wings. Is there any reason people might be waiting? Because anecdotally, what I hear is a lot of people go, yeah, my rate's already pretty low. I don't know how much I'd save doing it.
Yeah, and if they're waiting, I don't think I would be, right? I think the long-term projection for 30-year interest rates, especially as the Fed begins to step back its QE efforts and begins to raise short-term rates, the long-term trajectory, at least forecast for 30-year rates, is for them to go up. So if folks are waiting on the sidelines, I think now is the time to act if they haven't been already.
Yeah, and here's another incredible stat. You guys say tappable equity is at an all-time high of $9.1 trillion. So again, a lot of that so far going to homeowners with high credit scores, but the potential is there. Andy, thanks as always for joining us with an update. We appreciate it.
Absolutely. Thanks for having me.